Welcome back. It's the last lap of the show, and Bosun is back in the studio. Right now, we're taking a look at S&P Africa Nigeria indices in the first quarter of 2015. Bosun, interesting numbers.
Very interesting numbers, but I think before we get to Africa, we still need to look at the stock market here. Again, a very interesting week. That will dovetail into the S&P. I think if you look at where the market was, we were all surprised on Wednesday when the market did about 881 million shares. Yesterday was 2.63 billion shares. That was massive. That had never been seen in recent years, not in the last 5 years. The last time you saw this market implosion of numbers was during the market boom of 2005 to 2007 or 2008 before the
crash.
Our meltdown came in. Then we saw 21,386 deals in one single day. And those banks that you mentioned earlier, FBN Capital, GT, Fidelity, Zenith, and the rest had triple-digit volume in terms of what was traded, almost 200 million in FBN Capital. And I don't know what FBN Capital guys know that we don't know, delaying their earnings until these elections over, and they're going to take the momentum and ride with it. Very interesting.
But then you see, both in the last couple of results that have actually come out from FBN Holdings haven't really impressed investors as much. But then the bank has always, the group has always said that it will continue to ensure that it maintains its standards. And we know that the bank is one of the strongest and one of the oldest.
If you bring in your numbers, even if it's a little bit tepid, as it were, the market will still take it along in its stride because everybody is in a happy mood. But let's talk about what our production crew put in on the TV screen, the S&P. These are the same guys who downgraded Nigeria's credit rating. But look at what is coming through. Let's talk about Africa a little bit, and we'll take that slide back on the screen now. African bonds did very well in first quarter, but we'll talk about some of the numbers from S&P as we got them yesterday. African debt markets, quote unquote, did well in local currencies in the first quarter of the year, with the exception of the S&P Tanzania Sovereign Bond Index that managed positive returns in US dollar terms during the first quarter. So quite a very interesting first quarter 2015 for Africa, but a bit topsy-turvy. We'll get to that now. You see, local currencies in Zambia, Ghana, and Mauritius were the most battered, as it were, in Q1 relative to a stronger US dollar. You saw a little bit of recovery for the Nigerian currency in the few weeks, about a week, two before the March 28 election. So what happened in the month of March kind of offset what we saw as a very serious, steep declines in the first 2 months of the new year. Only Kenya, South Africa, and Namibia managed to post positive returns. Now, talking about the stock markets in US dollar terms, out of the 13 African exchanges that the S&P Africa country indices actually tracked. So S&P tracked 13 markets in Africa. Only 3 were positive in the first quarter. Kenya, South Africa, and Namibia. All this will have to be a little bit recalibrated with what we've seen in the last couple of days. Now, if you look at the S&P Africa Frontier Index, that delivered 4.9% during the month of March, and according to S&P report we got yesterday, that was due to strong performance from Nigeria. So Nigeria was a star performer in the market towards the end of the first quarter, towards the end of March. Overall, however, it was the Kenyan the Nairobi Securities Exchange that was the best performing equity in Africa in US dollar terms, 4.9% over the previous quarter. That was the last quarter of 2014. Now, let's talk a little bit about Nigeria now in specific, and the screen looks really heavy. So let's take you through that. Nigeria actually helped the Frontier Market Index. We'll talk about that. The BMI, what you call the S&P BMI, that's the bond market index, gained 12.5% in the month of March. That was very massive for Nigerian markets. And these are stories from the outside that support what you have been hearing from us here on the channel over the last couple of days, that Nigeria is still the market to beat across the sub-Saharan continent. The BMI delivers 8.53%. That's the bond market index in the S&P delivered 8.53% in dollar terms per annum in 30 years. That was quite impressive for the Nigeria's sovereign bond market. Now, if you look at the breakdown of that a little bit, the financial index raked in 20.1%. When the March market alone, the industrial index was down 17.4% in the month of March in US dollar terms. However, the sovereign bond index outperformed equity indices, which means that government bonds, both in Naira and the dollar terms, outperformed the stock market over the years. So year to date, the bond market was still the best performer. However, if you look at the last few days, in which we're now looking at about 18.8% for the Nigerian stock market, 18.80% as at the time we finished off yesterday, the first year-to-date gain of 3.09%, and a substantial 10% almost in one single day is now neck to neck between the debt market as well as the equities in Nigeria. That's some of the numbers from the outside, recapping the month of March for you on the positive election news, especially the presidential and the National Assembly polls, as it were. Harriet, you want to come in at this point?
Yes, what I want to even quickly, ask, and I know most people are actually, tossing around in their minds. So we're coming into second quarter with such an impressive, results from S&P, not forgetting that we were actually downgraded and then very recently by Fitch Ratings Agency as well. How is all of this going to, impact on the market going forward? This results from S&P, very, very, very sweet. Let me put it that way. How is it going to impact on how investors, especially foreign investors, are going to be, the kind of decisions they're going to be making with regards to the Nigerian market? The
foreign investors are the ones who contribute the headline part of these numbers that you've seen, whether it's in equities or currencies and fixed income, both treasury and bonds, as it were. So, whichever way you look at it, these guys have their numbers. With all these figures will flow into what the S&P and Fitch will consider moving forward into second quarter in terms of the outlook for Nigeria, moving it back from negative to stable. Perhaps we'll go back to our BB plus or BB minus, away from the single B that we previously had. All these are part of the positive things that will carry into the second quarter. We're already stepping into the next 24 hours or so. Then a few things, if we do them right, down the rest of the quarter, that would also be positive. If some of the earnings for first quarter from the companies listed on the market is not likely to come in as strong as 2014. So let's warn ourselves here. Let's put a caveat out there for our viewers to hold that will not really be. It's been very brutal for January and February, as it were. So all banks, all other companies will likely report a bit of a downside, or, well, a bit of a muted soft first quarter earnings. When that starts coming in from sometime in April, towards the end of April, as it were, if there's something positive from the political and the fiscal environment ahead of May 29 handover, we might just be able to tiptoe to the second, to get the second half out of the way. The real action will be the third quarter of 2015. Yes,
I know that, a couple of days ago we had some analysts on the program who talked about we should be expecting tepid, second quarter, second quarter.
Yes, I'm in line with this.
But then, looking at the fact that we're also tracking some other global, issues that are coming, particularly oil prices, I always still go back to it. And as of yesterday, we saw oil prices very muted, below $50 per barrel. Now, all of this still coming in line with the domestic challenges that we're going through at the moment.
No, the point is that despite that, we're not the only one who's been buffeted by the volatility to the downside for the crude oil. So you have Angola, you have a few other African countries in the same basket with us. We have Russia, those who are outside the OPEC and what have you. The world markets have priced in this for Nigeria as well. They just want to look at us and see a few things that we're going to do better, then that will be priced in as well. So it doesn't mean that we're going to have the oil price like an albatross or something we are shackled to never get out of. No, it's an indicator. However, if we do a few other things right, if we show that we can manage things from fiscal environment and the monetary environment better together, they will just price the price of oil into it, which is down, and we'll still get on very good returns in the market. Don't forget, oil isn't the only story about Nigeria. It's a major story, but it's not the only thing we have. So there are a lot of other fundamentals that will work in our favor. So it doesn't look like once oil price is down, Nigeria will remain down as a sovereign entity. No, that's not the story. So let's price in the price of crude oil. Analysts have priced in that, look, it's going to be a very brutal year for oil prices, as it were. What else will Nigeria do better moving forward? What will change moving forward? Once they see those changes, it's likely that we're going to get the better side of it. That's how it's going to play out.
Well, so looking at getting the better side of it, we're still looking at growing the rail sector. So that's one sector that's actually going to see, or one of the many sectors that's going to be brutally head-butted.
Once confidence comes, once confidence returns at the rate we're looking at it, look at the LCCI, Lagos Chamber of Commerce and Industry Business Confidence Index for the first quarter. You saw that majority of those that were surveyed in that report, and you had the president of the LCCI here in the studio about 2 weeks ago now, early previous week, and he talked about this. Once this confidence is returned, those who are staying out of Nigeria, whether it's in the oil and gas, in the SMEs, or the MSMEs and whatever, once they start coming back, you see the rating come back, and most likely we will keep that track till the end of the year, so we can compensate ourselves for 2014. Okay,
Bilson, thank you so much for coming on the program. Always a pleasure having you here in the studio.
My pleasure. Be with you.
Well, that's it on today's edition of the program. I'm Harriet Agbenyi. A quick reminder, you can watch today's edition or past editions of the program on youtube.com/channelsweb/business morning. Bye for now.